Right. Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and there is a lot of news flow. By the way, you have to admit that there's a bit of a risk-on mode of sorts, right? Because key central banks, they've indicated that the plan to scale back the loose monetary policy is going to be very, very gradually. Of course, because of expectations that these inflationary pressures are transient. Now, of course, you can argue what if the central banks are wrong, but that's the stand as of now. And you can see that there's a bit of a risk on because cryptocurrencies as well. Bitcoin is now northwards of 67,000. It's not alone, by the way. Ethereum, Matic, some of the others too have moved up. So there's a bit of a risk on mode across. The only wrinkle, aside of the US Fed murmurs, which I'll tell later on what they warned at, but amongst all the news that I was scanning last night, not that everybody's saying that this is a really big piece of news, but look at this. China's military is using fake US warships for missile target practice in the desert region of China, of course. So, I mean, interesting what's happening. Taiwan is a hot potato. We all know that. But wow, it's come to this. Let's wait and watch. Anyways, the US markets were doing okay though. There's no problem at all. I think there was largely a bit of gain. You would argue that the gains were not too pronounced, especially on the NASDAQ, but we are in the green at these levels, which is actually a good sign. And very curiously, there's this chart that highlights what's happening to the 30-year treasury yields. And it's very interesting to see that the yield continues to be at record lows. Now, the point being, if the market was worried that there's going to be uh, sudden tightening or a tightening spree that we're going to be on, then these yields should have behaved differently. The fact that they are not uh, tells you, well, the mind of the market, right? At least we may all argue that this is wrong and it shouldn't be this way, but this is how it is. And it was very interesting chart. Uh, I mean, I'm not a US markets or a treasury expert by any means whatsoever, but what I read, and if it looks interesting and it's corroborated by a few people, including the Bloomberg colleague of mine, or not colleague really, but a Bloomberg anchor, Tracy Alloway, who I follow very closely. And then she mentioned this as well as a very curious behavior of the market. So just thought we'll bring it out to the benefit of everybody. The SGX Nifty should come up on your screen next, and let's see what that is indicating in the session today. And then we'll do a quick check of the MOV function just to see what trade looked like yesterday. So a flattish start, nothing untoward anticipated even otherwise. A quick check of what happened yesterday before we move on to the trade setup and a bunch of stocks that we need to focus on today. First, the market breadth was positive, 3:2, or slightly better than 3:2, but roughly 3:2 in favor of the advances. A bunch of stocks did really well, right from building materials to travel to cement, which is actually starting to pick up ever since the coal costs have started to come off. So that was the interesting bit. We could see a bit of a reversal maybe from Soba post the good numbers, but IndusInd Bank was that big sulking point. So therefore, that certainly remains a stock that people need to focus on. But yeah, I mean, we had a pullback from a bunch of high flyers, but you have to admit that largely some of the others on news or trends did really well for themselves. Now, what's the trade setup? Like I said, I think the global risk on mode, you can call it a risk on or no risk off mode, will certainly aid sentiment on the Lal Street as well. I spoke to not a few, but a couple of local dealers. I'll admit it was not like four or five, but a couple of local dealers who sounding upbeat. Consensus amongst them was that defense stocks and building material stocks look set for some gains. So therefore, that's an interesting bit. I know defense was always in favor, but building materials of late had fallen out of favor. These guys are sensing some bit of uh, pull back, if you will, into select building materials. So you got to watch out for that. And metals will remain in focus for the week, right? Vedanta has done what it has done, and I'll get to that in a moment. Tata Steel numbers coming out on Thursday, and I think people will be watching out for that as well. But I think I spoke to a few senior traders who advised caution when it came to metals. So please be mindful of that, if you will. That's certainly a pocket that you need to be watching out for. Now, A couple of updates. Primary market action. Paytm IPO subscribed 18% on first day. Not the best, but it's a large IPO and largely could happen in the day three. So be mindful of that. Do you need to subscribe to this? I think, like I said yesterday, better that you read all the stories and decide for yourself. You can log into BloombergQuint or any other portal. Everybody has data on this thing, but I know the kind of work we've done. So you may want to log into BloombergQuint and try and read a bit about Paytm IPO. Securities in FNO ban. I think Escorts and PNB were anyways in the ban. Sun TV is the addition out there, so do watch out. And a bunch of results today. On the Nifty side, it was M&M as well as Power Grid. Some derivative stocks include, amongst others, Bosch, which could be interesting. Petronet LNG, which is meeting for a large dividend as well today. And Max Financial, possibly a large dividend today. I don't know. The board meeting is scheduled for that. I don't know what's the quantum of the large dividend that they'll come out with if they do. And yeah, Max Financial could be interesting as well. And some other stocks include, among there are a bunch of other stocks coming in, but after the numbers that have come in, HEG, after Graphite India's numbers, HEG remains in focus. NCC certainly remains in focus. And I think Greenply and some of the others too, people will be watching out for. What about stocks that could react? So Britannia, the numbers came out certainly below estimates. I thought just bring you the JP Morgan view, that could be good. So they maintain the rating overweight and target price of 4,000, but they're saying that the earnings miss is on the significant COGS inflation. Every company is facing this. The revenue growth is supported by continued market share gains, which is actually a good sign, but the raw material inflation does weigh on margins. They believe that price hikes and cost measures are in place to support profitability ahead, and which is why I think the overweight rating with the target price of 4,000. Let's wait and watch how Britannia reacts. The volume growth numbers too didn't look all that bad, but certainly you could argue that amongst the optimistic estimates that were there, a bit of a miss. Let's see how Britannia reacts. Aurobindo is the other one. Now, there are two ways to look at Aurobindo. First, of course, the numbers, and they were a miss. 5941 crores, the estimates were 6093, margins at 20%, estimates of 21.2%, net profit below estimates as well, 697 crores, estimates were 786. The point is, one, it was known that Aurobindo numbers were bad. The street chatter had it. So you have to bear that in mind. And it's not that the stock had a runaway move ahead of the numbers. It has been a bit of a lackluster stock ahead of the numbers. And I think the US market's commentary that came in from Aurobindo looked pretty okay. So you might actually see a bit of short covering in Aurobindo. Don't be surprised if you see that. So what I would suggest is that if you're trading Aurobindo, don't go out and short it. For all the reasons that I mentioned. At least I believe it shouldn't be shorted. But if you are an expert trader and you certainly might be knowing more than me, then please go ahead and do it. Soba, well, the volume scale new highs, and which is why it's interesting, right? One, the numbers, firstly, revenues up 57%, margins expanded, net profit did really well, 1.98x at actually 2.98x, right? Sorry for my math, but yeah, terrific numbers from Soba. The mood part is that the Q2 volumes were better, up by 51% YOY. So the volumes are doing well. It's in the right geography, right? Because you believe that all the tech-enabled companies, if anybody from Bengaluru is listening out here, yes, you know that your earnings have swelled if you are a techie and you are looking maybe to buy a house as well. So I think Soba is interesting. A couple of days later, Prestige comes out with numbers, could be interesting to watch it as well. So do watch out for some of these Bengaluru, Pune, Hyderabad, Chennai, NCR based real estate companies. I don't get tired of pointing out real estate, do I? Some other results in focus. EID Parry, I thought the numbers were a bit soft, really. EBITDA margins have come off quite materially, 10.69% versus 15%. And so I don't think the sugar division had as much to do with it as some of the other businesses, but yeah, certainly bad numbers. Ujjivan SFB, I mean, net loss 273 crores, very high. The GNPA spiked to nearly all-time highs of 11.8%. You certainly should see some reaction. A couple of positive numbers out there include a Shyam Metallics and HG Infra, both of which saw pretty strong set of numbers that came into play. So I think I'll watch out for these as well. Those decent numbers from Forgings as well, which I thought did very well, both on a YOY and a QOQ basis. So those numbers also look pretty okay. Some stocks in focus include Cadila Healthcare, which is going to supply 1 crore doses of Zycov-D to Government of India. Root Mobile, as per Money Control, has launched a QIP at a near 7% discount. And Vedanta, which has delisted the ADS from NYSE at close of trading yesterday. A lot of people believe that this could be a material positive. Could the company, will the company now raise some capital? Could there be some dividend? Lot of theories out there. Smart money is entered into Vedanta as well. It's not a stock that usually tends to reward traders very materially, at least people who are not in the know. So be careful of trading into Vedanta. The insurance trends looked okay, I thought. When I look at the individual APE, SBI Life, of course, did really well, up 23%, largely due to strong ULIP sales. ICICI Pru, the individual APE was up 23%, but I think compared to the strong previous month's trend, has moderated a little bit. So be mindful of that. HDFC Life steady at 20%. I thought Max Life was a bit of a disappointment. So clearly, the one clear standout performer is SBI Life, which did really well. ICICI Pru, as I said, too, did well, but the growth has moderated. So keep that at the back of your mind. HDFC Life was steady. And viewers, I would watch out for, like I said, be mindful of Aurobindo Pharma simply because there's a con call at 8:30, and I think the commentary from Aurobindo could actually spur the stock on. So you might want to log into the con call or hear the con call excerpts on any of the news channels. I'm sure everybody will bring that up, so you might want to be mindful of that. We're not a news channel, we'll not bring it up, but some of the others might. And I think a couple of other stocks include maybe an Electra, which got an order. So I think that is something that you might want to watch out for. But I think the insurance trends certainly key to monitor. Lastly, viewers, before we wrap up, I just thought it was pertinent to highlight what the US Fed is saying in its financial stability report. They come out with it, I think, twice a year, and they came out with this yesterday. They're saying that the rising prices of risky assets make them more susceptible to perilous plunges if economy turns. Well, standard advice, but they are saying that the stable coin threats are going. So stable coins, for any of you who don't know, loosely put, they are these crypto assets which benchmark themselves against some other assets. So be mindful of that. They are saying that fragility in China's commercial real estate sector could spread to the US. So that is something everybody needs to be mindful of. Keep in mind, I think if you read any news point, it tells you how it's not just Evergrande related. Now there are other companies which are also doing defaults, and they are saying that the volatility is it's very difficult to predict the volatility to the meme stock frenzy because of social media influence in trading. So some pretty pertinent warning signs highlighted by the US Fed. Well, the market continues one way for now, and party as much as you want, but dance closer to the door, as they say. Watch out, as I said, for a bunch of stocks, including building materials, real estate, and some of the others. Everybody seems to be liking to go to that party. Thanks so much for tuning in. Have a safe, profitable day ahead. Manage your risk well, including the health risk. If you're stepping out, please stay masked up.